All right, let's talk about pensions. Low interest rate environment that we've seen in Nigeria. Treasury bills are doing what, 0.5% as far as the rates of returns are concerned. So how have the pension funds performed so far this year? With a lot to discuss as far as the low interest rate environment. What about the returns on our pensions? Joining us to discuss this is Mr. Dave Uduanu, the CEO of Sigma Pensions. Good morning to you, sir. And it's great to have you back on the Global Business Report. Sir, how would you compare fiscal year 2019 to so far fiscal year 2020 for the PFAs? For you yourselves over at Sigma Pensions, how have you seen things? How have you managed things?
Thank you. Well, I think, look, the COVID-induced lockdown, the impact on global economies is similar across the world, and including Nigeria. And that has resulted in reduction in aggregate demand. And the response of central banks globally is to turn to very loose monetary policies that have seen interest rate close to zero in more developed markets. In Nigeria, the situation is similar. The central bank has moved to ultra low monetary policies, and also, in a way, in the absence of fiscal authorities, stimulating the economy through direct credit, subsidized credit to what is perceived as a real sector. And that has driven interest rates as low as, below 1% in most instances, relative to 14% last year. So the PFAs, have had to navigate this. As you know, we manage diversified investment portfolios, and what is clear and what is important is that the investment portfolio is not concentrated in only one asset class. So moving from last year where there was a higher allocation to fixed income securities, I think PFAs are now moving to more variable income securities. Having said that, let me explain something. A lot of people don't realize that fixed income securities that are held on a mark-to-market basis in the books of PFs actually do better when low interest rates are low, as interest rates are reduced in fixed income securities like government bonds are increasing in market price. So that has sort of provided an anchor to the pension funds, and some of the fixed income securities are held on a held-to-maturity basis, so anchored on very high interest rates. So if you combine that with the fact that the stock market has experienced a rally year-to-date, I think it's about 10% year-to-date, because, as you know, as the bond market interest rate reduced, two things happen. Businesses, cost of credit becomes lower for businesses, and that translates into increased return as far as profits are concerned. And this leads to re-rating of companies and increased valuation on the stock market. Secondly, the huge liquidity that then moves from fixed income portfolios that are being sort of liquidated or matured into the stock market means that there's only one game in town, which is the stock market. And that stock market has provided the anchor to pension funds. So I think overall what we're seeing is that returns are still healthy. I mean, the biggest challenge we have is inflation, because inflation right now close to 14%. The question is, how do you deliver real rates of return? And that's a challenge. I mean, from a macro overhang, I think that there's nothing you can do about it, because pension funds are only invested in domestic securities. We're not allowed by regulation to invest in offshore securities. So what we've done is a rotation of assets from fixed income into equities and into alternatives. So things like commodities like gold. There's a listed gold ETF in Nigeria. It's done very well on the back of the increase in gold. Gold is a defensive asset in times of, low interest rates. People run to gold because it holds its value. So that's what we've done. But unfortunately, we've not been able to go beyond the listed space into the alternative, because that market is very small and is not. There are not a lot of securities to choose from. So the portfolios have done well, and I think some PFAs have actually done better this year than last year, unlike what a lot of people think. So so that's how we've been able to navigate it. It's challenging. It calls for skills, it calls for diversification, and it calls for real investment skills in managing diversified asset portfolios.
Sir, excellent summary. Thank you. You preempted my question on inflation. You preempted my question on real rates of return. Thank you so much for the explanation. So at this point, do you engage PENCOM and say, dear sirs and madams at PENCOM, can you please give us more room to perhaps go offshore to try to get higher returns from overseas. Well, what is the conversation now? Because it's almost like PFAs are boxed in and don't have much room. So do you engage the regulator and try to see if you can get more room to go offshore and get better returns, considering where things are now here?
Yeah, you're right. This is precisely what we're doing. So there's a regulation and a law that prohibits pension funds from investing in offshore markets. Now, that law was revised in 2014, and there's a bit of a wiggle room for us to play with, but it needs presidential assent, and it also needs access to FX. And FX is the hottest commodity today in Nigeria. So we are speaking, and we are going to continue to speak to the regulators to allow us a small allocation, of maybe 10% to offshore markets, because it's really a question of the purchasing power of the pensions of the workers in Nigeria. I think it's a national debate, and the way we look at it is that some people might look at it and say, why do you want to deplete the low FX reserves we have? But if you think about it clearly and carefully, if pension funds invest in offshore markets, two things will happen. One, the returns of this investment will be in dollars, and more importantly, if you make very good investments and you have upside, you've seen the kind of rallies we saw in American stock markets. Companies like Zoom or Apple and Amazon, some of them have done more than 100% return this year. These monies ultimately will come back to Nigeria and will potentially increase the stock of foreign exchange we have in country. Secondly, the fact that by investing in offshore assets, it could be private equity or privately held companies, you could then use it to form sort of partnership with Nigerian companies. And one other thing we're looking at is how can we find companies that focus on the export markets that we can invest in either directly or through a fund that would then increase the stock of FX we have in Nigeria. So those are the discussions we're having internally as PENOP, the industry association, and we'll also engage PENCOM and hopefully the right authorities either in finance, the presidency, and the central bank to make the case that it's time to allow pension funds to invest in offshore markets, because being boxed into a country in a country restricts your ability. And I think the bigger point is that even though there's a lot of demand and need for credit in Nigeria, the banks are doing quite a bit, but businesses are struggling. So aggregate demands in Nigeria is low. So even if you give all the monies to companies, who are they going to sell to? The purchasing power is low. You can see what has happened. I think people are hungry, people are angry, and the savings base of the economy is low. So what we need to do is to find ways to increase aggregate demand, and I think this is where the fiscal authorities will come in. The last discussion, I think, is around infrastructure, and I think that the attention and the focus on government should be how to invest in both fiscal and social infrastructure, like roads, like power, and social infrastructure like health and education, because that is what will impact the population and the economy directly. But unfortunately, this is outside the remit of the central bank. There's the fiscal authorities and the government that should step in to do this. Yes.
Mr. Dave Uduanu, CEO of Sigma Pensions, thank you so much for joining us and giving us the insight on what the PFAs can do to get better returns in the future in Nigeria.